Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us this afternoon, we have Don Calcagni, Chief Investment Officer with Mercer Advisors. Don, it's great to have you back. Welcome to Trade Talks.
Great. Thank you, Jill. I appreciate the opportunity to join you today.
All right, you got it. And of different issues the market is focused on, what concerns you the most?
Hands down, inflation. You know, at the end of the day, if we don't get our arms around inflation, if the Fed ultimately does not act either through tapering or through rate hikes, you know, inflation, I think, could ultimately derail the market. And certainly valuations are part of that. Certainly COVID still continues to be a concern. We have supply chains that are, you know, significantly disrupted globally. A lot of that is what's fueling inflation at the current moment. So, you know, I would say that the number one issue, the most important domino right now, is inflation, and that could ultimately derail the market.
So, Don, speaking of supply chain disruption, this massive infrastructure build, will that impact inflation as well, as we're all competing for supply?
It absolutely will. I mean, the way to think about infrastructure spending and inflation, it's all about headwinds and tailwinds. So the infrastructure package will certainly be a tailwind. It's definitely going to add some fuel to the inflation fire that is currently burning slowly throughout the economy. I mean, right now, if you look at GDP, about 45% of our GDP consists of government spending. If we pass the infrastructure package, that will increase to somewhere between 50 to as much as 65% of all economic activity ultimately coming from government spending. So it'll certainly add fuel to the inflation fire. You know, I think longer term, there is an argument to be made, Jill, that investing in infrastructure should enhance the overall productivity of the economy, you know, through rail and bridges, but also soft infrastructure like education, scientific research. Those things ultimately should help the economy longer term, hopefully keep a lid on inflation. But certainly in the short run, this will definitely add to those inflationary pressures.
Well, I guess the million-dollar question is, who's going to pay for the bill, and what does that mean for capital gains taxes?
Yeah, I mean, that's one of the issues that the market is looking for some direction on, Jill. I mean, at the end of the day, we had a very large tax cut back in late 2017 that added fuel to the deficits, and certainly, you know, the Democrats in Congress are talking about repealing those and increasing capital gains taxes, and certainly that will put some downward pressure on markets, on valuations. And so, at the end of the day, if you want to pay for a package this large, you have to go to where the income is, right? So it's going to be corporate income taxes, it's going to be capital gains taxes. You know, there's certain members of Congress even talking about a wealth tax, very difficult to implement, but that's certainly on the table. And we've been saying this for years now, Jill, that higher taxes are coming, right? We have $27 trillion in debt. There's certainly a lot of demands on federal government at the moment in terms of spending demands. But look, the cash has to come from somewhere. It's going to come from a combination of higher spending, inflation, but certainly higher taxes in the years ahead.
Are you concerned about the COVID variants and how they could potentially derail the economic recovery?
You know, absolutely. I just returned from Denver, Colorado, and it's interesting seeing how businesses are already, Jill, beginning to respond to the uptick in COVID cases over the past month. You know, talking to a lot of colleagues, talking to a lot of clients, there's a number of us that feel like this is early March of 2020 all over again. And I think we're seeing some of that sentiment manifest itself already in the retail sales data that we got this morning, right? We see that retail sales are down about 1.1%. A large chunk of that was coming from a decline in automobile sales, but there's also a decline in the rate of growth in hospitality services and things like that. So at least in my view, I think it is going to derail our recovery. And derail is probably too strong of a term. I mean, the economy is ultimately going to be growing through a combination of, you know, starts and stops. And so I could see this stalling the economic recovery for a period of time. Won't permanently derail it, but it's definitely going to stall it. And if we think about the implications for that, I think tapering is off the table for Q4. I actually think it's on the table for Q1. This is going to slow us down, and I think subsequently the Fed is going to be a little slower to move on rates.
So, Don, to wrap up here, how should investors be preparing and positioning their portfolios for this backdrop?
Well, I think we need to prepare for a rotation. I think we have to prepare for higher rates in the years ahead. I think it's in the math, it's in the data. So first and foremost, advisors should be unwinding those higher value growthier type positions. You know, we have companies trading at 40, 50, 60 times next year's earnings in your portfolio. Now's a good time to take those gains off the table, especially with the very likely prospect of higher capital gains in the future. So it makes so much more sense to lock in today's lower gains, diversify the portfolio, move into lower valuation type positions. You know, I would also be cautious that, you know, we should be adding non-US equities to the portfolio. All of this QE, all of this printing ultimately should put some downward pressure on the dollar. One way to hedge against that, Jill, is to own non-US securities. And I think finally, I would encourage investors to look at the tax planning vehicles that exist out there, things like opportunity zone funds. We still have about 5 years left on those under the current legislation that's in place. And that could really help investors ultimately shelter or defer some capital gain.
All right, Don, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thank you, Joe.